Oh man, we are officially deep in the red. Well, we're actually back where we were last week. We were down $145 today. Stock market decided to take a huge dump, coming down today. Yesterday in the future market, it was already down, started up slightly up, and then just crashed down. This whole morning too, we just saw a huge drop. So if you look into the S&P 500, we see that just really quickly, it just on something I've never seen in the past couple of weeks now, just continuing to drop down. And we see that there was actually this really large candle dropping down all the way to like 4,500. And surprisingly, it recovered quite nicely to about 4,062. Still down pretty much a lot from today, but that's primarily because we see in the VIX that the VIX has skyrocketed as well, about $1. It was up until about 23.34 earlier in the morning, and now it's kind of dwindled back down to 20.78. However, it seems like volatility is spiking up right now, so that's why we see these large decreases in the P&L so far. As you can see, everything is red, and I mean everything except for silver, which is usually used as some type of hedge, comparable to gold. And so we see that it's almost at that 50% mark, so really close to taking profits, but currently everything else has just dropped down. But I mean, if everything's dropping down, we have this high delta, it's expected to be losing money, so that's okay. So what are we going to do now? Everything's in the red, and I think my suggestion, based on seeing how this market just crashed down on a Monday, I would say we do nothing. We're down 126, but that's primarily because, again, of volatility. And we see that now that the S&P has actually recovered slightly, I don't think there's really anything we can do at this moment. A lot of our positions are going to be positive delta. So if currently our deltas are around 27, I think that's still an acceptable number, considering that prices can recover. If they do not and fall on further, we will see this delta increase, and we would have to manage it. I would say once the deltas reach above 50, I think that'd be kind of high for my portfolio. So what I mean by managing deltas is that we just had to either add on some call positions, call spreads, or something to lower the amount of loss that we receive, and also manage this, because this is the main driver of the P&L right now, since the markets have been pretty stagnant except for today. Delta is the primary driver of a lot of our profit and loss currently. So if we keep this at a pretty low level, which I'd say is about 1 to about 50, or even 1 to 100, depending on how aggressive you want to be in the stock market. We've been pretty high and rising throughout all last year, so seeing a drop down, I would say 100 delta is pretty high, but it's everyone's personal taste and preference. So I'd say I want to stay closer to neutral to bullish, and so keeping a delta about 0 to about 50 be acceptable for me. But in the meantime, we'll just keep looking at our positions. So the only thing I'm really watching right now is just the silver one. Once we get to about 20, I already have a working order in. We'll be able to close in this position. So we'll see that primarily our profits are coming from the call side, which is way over 50%, but this put side also seeing some profits as well. But everything else, yep, it's been dropping as my prediction was going. So far, it's seeming to be true. Even with this decline in the S&P, and it's recovering quite nicely, we do see that this price has gone back out of the money, and so now it's below the 24 mark, and we're seeing a nice recovery. Still got a bit of ways to go, but that's also because we have a ton of days left. So since we have a ton of days left, I still let this one run and see where the price winds up being in the next 19 days. DraftKings as well dropped down quite a bit, but we still have like a few more dollars to go before we reach the strike level for this put. about 22.50, which would be about $3, which would mean that another 10% decline would be needed in order to reach that. So we'll keep on monitoring that, but I don't think right now this is a huge issue. If it does reach that level, we might have to extend it out in time, but we'll see if this continues to drop more than 10%. This one, actually, though, I may see myself closing this one later on at about the 20-day mark, just because the P&L and my future prospects for this company, American Eagle's like one of those mall companies, so I don't think there is a huge case for people going back to malls. I feel like even before the pandemic, that was kind of a dying business, so this was kind of something that I don't want to continue pressing my luck on. I feel like American Eagle will continue to fall. There's no real catalyst for it to stay propped up, but we'll see. Earnings are also quite a bit away, so about 2 months from now, so I don't see any future prospects showing that they may have a turnaround. So if anything, if I do reach a profit at the 20-day mark, maybe I'll extend it one more time, but more than likely I'll probably close this, since there's nothing really keeping this price from falling. And well, I mean, we'll see. I don't really go to the malls anymore, so I don't really like that position. Same thing for Macy's. And Macy's also, I think they were shutting down a lot of stores, not too much popularity from the youth also going out shopping at the malls. It's not as common anymore, at least where I'm from, and so I don't think that's a pretty big trend. However, we do see that we do have a slight profit, so maybe at the 20-day mark, considering that there is about a month till earnings, may close this position and maybe have an earnings play later on. But currently we're at a profit there, and so yeah, I think the main ones that have been affecting my portfolio since the beginning actually is this Ford. DraftKings has dropped significantly as of today, and American Eagle, yes, that has been dropping. But again, we'll see. My ideal situation would just be for the VIX to drop down lower, and if it doesn't, then that's too bad. But if it does stay up higher again in the next cycle, I will be extending my the duration for a lot of my trades, just so I can collect the higher premium with the higher volatility. But if it does not, if it goes back to normal, then you'll see a lot of these losses actually dwindle down, because that would be a volatility crash, which would also result in me reaching break even or profit. But if it does stay high, then this cycle would again be considered a loss, and then I'll just go ahead and continue to recycle with higher premiums and a longer duration. So with that being said, I think that's pretty much it for today. Again, a bloody market out there, which again, it was pretty disastrous in the beginning, but now it seems like people are starting to catch their foot, and it seems like the price has actually gone up slightly. Interesting. So it was in the red, now it's slightly in the green. So we'll see where this winds up going. Maybe tomorrow it'll fully drop down or fully go up. That's like pretty much any analyst who says it could possibly go up, it could possibly go down. So now I sound like a professional analyst. But yeah, so I mean, we'll see where this heads out. And if it continues to drop, we'll have to adjust our deltas maybe, because this will go up higher. But the deltas will go up higher, but we'll see. For now, I think nothing is warranted. We're not too deep in losses for year to date. We're not too deep in losses. Well, I guess P&L we are, but I think our net lick is still at a pretty healthy position. So considering that the market dropped down about almost or a little over 2%, and it's actually recovered quite nicely, I don't think, well, maybe there's a chance that this stock market goes further down, but it doesn't seem like it hit my P&L too hard. So we'll continue to watch, see what happens. But in the meantime, I think that's pretty much it for today. All right, this is Nick signing off. Bye, guys.